Welcome to a weekly recap of gold for October, 2nd of October. This analysis I have retests of 1916-ish, or even I send my recap the next day that 1910.5 retest would be amazing before continuing up, right? One thing I failed to take into account was the bear scenario. I usually always add a second scenario just in case market structure doesn't play out. So the bear scenario would have been at the break of 1910.5, continue down to like this area, this wick, right, which is the next structured area. So we'll go over what happened. Excuse me. So during the week, October 12th, nothing happened. Price just ranged, right? We can see it was just ranging up and down, right? The next key level was at 1910, and on the October 12th recap, I said that to watch for 1910, right here. A lot of wicks here, right? A lot of price behavior at 1910, and then what price it was, price came down, and it came down during right before pre-New York, and as soon as it tapped 1910.5, the market structure started shifting. So that would have made for that would have made for very clean buys, and we'll go over that because it was very obvious that market structure is now shifting. So we're doing this, right? And then price created a double bottom right here, created a high, created a higher low. This higher low would have been the most optimal entry right here, right? Then once this high broke, we went up, created a new high, and then created a new higher low, right? Retested this area a couple of times, and then still in London, we pushed up back to our key level, which was up here, and I'll tell you why we had that. By almost the new 4 a.m. candle, price pushed up. So this was 135 pips in a matter of 3.5 hours, right? So this is what I mean. Gold, when it reaches a key level, it reacts, right? Double bottom, and then higher low, continuation up. So market structure shifted and started becoming bullish, right? So we knew that it was going to reverse at a key level. I remember that because one of the next trades is also a reversal trade. So the reason why we were targeting up there was because of this area, right? This area. So the top of it, we targeted there, right? And then in London, we saw structure actually shift again. So essentially, you could have viewed this kind of as a liquidity. This was a liquidity grab. So let's say you didn't know that price was going to come down. So what we saw was price reject this once, rejected twice, right? It continues to range until New York, and the price pushes up right at New York open. A little bit after New York open, push it, and then we rejected a nice strong rejection. So you could have also entered after this 5 minute, right? After this 5 minute, your first target would have been at 1910.5, but you knew that, okay, essentially in the overall picture, we had our highs, lower high. This was the next lower high. We had our previous low. So once this low broke, we were going to continue down, and we were going to continue down where? To this key level here, okay? So let's say you only cut this 100 pips, and then you could have had a runner going. The stop loss right there, a little bit higher, could have been the 20 pips, right? Still 1 to 5. And then our target was, one second. Our target was this area. See these wicks over here? A lot of like orders over here, liquidity. This is where liquidity is on this chart. Still, it's a valid support, right? And we draw supports from the wick to the body. Okay, so anywhere in that area. And then what we saw was the next day on October 13th, price actually reached support and it rejected support. So this was a very nice trade, right? Like could have even aimed here, 200 pips, 100 pips right there, 300 pips. And then price actually in Asian session, October 13, New York, all the way till Asian, price consolidated, but it was consolidating to push down to where? To push down to our next key level, which was down here at 80, 83, 81, right? And like I said, that was due to this structure over here, right? Market structure. So let's see what happened when price came down. This is very key because it's a reversal trade, right? So look what happened. Price drops. Price drops, bounces back, creates a high, creates a higher low right there, and then continues up, creates another higher low, higher low, higher high, higher low, right? You see how structure is shifting? This would have been a very aggressive entry because it wasn't as clean as the one from before from 1910, because that one did this, it came down, retested, and then created a higher low, and then it went up on the 1 minute, right? So double bottom. This one was more of kind of like a V pattern. Price came down, instantly rejected it, and then began trending up, right? So this, you would have to be very confident to be able to take this, but it is very possible because you just have to trust your intuition, right? Let's say you did take this at the very bottom and your stop loss would have been below the level. So it would have been very risk friendly, so 19 pips, and then your take profit would have been at the next market structure, which was 1910.5. So it honestly comes down to knowing what to look for on gold. And the best thing I've learned on gold is that it just wait for price to come down to market structure and then base your position off there. Like I know some people would have been able to take this, and it would have been 200 like 70 250 pips in like a couple hours. Excuse me. By New York, it would have gone up there, but you don't even need that, right? You could have just targeted this market structure here, which is still like 100 pips. And gold gives that 100 pips very easy, right? So just wait for market structure and session. And it doesn't have to be at like session times, right? Like this was an Asian price push down. It's just whenever price reaches market structure and we just observe what's going to happen. And when it reached this market structure, price rejected it and then it continued up. So see, to continue down, I would have to break this and then continue down, right? But it's still, we've been dropping. We dropped from 1925 to 1880. That's over 450 pips that it dropped, right? So we knew that it came down to a solid support, solid demand area. And then when you watch lower time frame, it started rejecting and then it pushed up and then New York finally the push up. So that's it for gold for the week. The rest of the week was choppy, right? Not clear reactions. We need more one-sided volatility, right? The rest of the week was just chop. Okay. So this was 250 pips, 220 pips, right? So 470 pips, and then another 100 pips, let's say 570 pips on gold. Thanks for watching. Take care.